IVM.
Switching houses for the better locality, switching jobs for the better package? Then why not switch to direct mutual funds on Paytm Money for higher returns? On the Paytm Money app, the switch feature allows you to shift your mutual fund investments from the regular to the direct mode so that you can invest directly with the AMC without any hidden fees and distributor commissions and earn up to 1% higher returns than regular mutual funds. This switch will ensure that all the other features of your scheme, like the investment objective, portfolio composition, and the fund manager, remains the same. Only an addition of up to 1% higher returns. Not a bad deal. Don't wait any further to maximize your return on investment. Just download the Paytm Money app on the Play Store and use the one-tap smart switch feature to earn high returns with direct plans. Ab mutual funds ke liye bhi Paytm karo. Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, P50 on Twitter, and I hope that all of you are staying safe in these challenging times. And as always, a big thank you to the authorities, to Mumbai Police, the BMC, and in fact, anyone, anywhere in the front line of this crisis, helping us live our days in our houses like it's normal, like we're doing this recording on a Zoom call. So, folks, I hope that all of you are safe. Today's episode, I have with me Viram Shah, co-founder and CEO of Vested Finance. Vested is a US Securities and Exchange Commission, that's the SEC, registered investment advisor. Their online platform enables investors from India to invest in US stocks and ETFs easily. I know this has been a hot topic for all of us, irrespective of this market meltdown that's been happening in the last, maybe a month or, and in fact, maybe even during that, a lot of people from India want to buy those blue chips in the US. It could be a Microsoft, it could be an IBM, it could be an Exxon Oil, but the procedure was always different. There were a lot of regulations involved. There was a lot of lack of clarity also, in terms of, say, what is a taxation, what is a brokerage? What do I need sitting out here? And stuff like that. So to answer all of those questions, for you to figure out, how attractive it is for you sitting here in India to invest in the US, I have with me Viram. Viram is going to talk to us about Vested, about the concept of investing abroad, and a whole lot of other stuff. He'll also have his take on, on what's going on in the markets right now and stuff like that. So Viram, welcome to the show. Thank you so much for doing this for us. I hope you're staying safe, and it's good to have you with us.
Yeah, thanks a lot, Anupam, for having me on the show. It's great to be here.
Great. I mean, we've been meaning to do this topic for a very long time, because I'm sure you're also aware that a lot of other people have come into this market of international stocks. A lot of Indian brokerages have also started something similar. So obviously there is a demand out here for investing in India. So let's start off with this concept of diversification, okay? Because if you're an Indian sitting here, you already have mutual funds, you probably have stocks, you probably have debt, you have a whole lot of stuff. So let's start with this concept of how Indian investors can diversify their portfolio geographically. Let's start from there.
Yeah, that's a very relevant question. So one of the things we constantly talk to our users is about the 4 pillars of diversification. And the first pillar is essentially diversifying by asset class. So as you pointed out, we might have stocks, real estate, gold in our portfolios, and we are all pretty well diversified by asset classes. The second is industry diversification. So you don't want all your money in one particular industry. So you say diversify across, say, pharma, banking, technology, etc. And the third sort of pillar of diversification is time. So in that respect, a lot of us have done very well because of this entire SIP culture, where we don't invest almost all our money in one go. We invest in different points in time. And so we are well diversified in terms of time. Now, the fourth pillar of diversification is geography. And that is the one that has been lacking in almost all of our portfolios in India. If you look at portfolios in the US, about 10 to 15% of their portfolio is diversified internationally. Whereas we, as Indian investors, have never gotten the opportunity to be able to do it in a cost-effective and an easy manner. And so that's what kind of started our journey with Vested. If you look at the options that you have currently to diversify geographically, there are 3 or 4 of them. So one is you have the option of investing into Indian mutual funds, which have some kind of foreign exposure. So that foreign exposure is capped at about 35%. You also have the option of investing into feeder funds. So these are essentially funds that are investing into funds that are in the US. So It's essentially a fund that you can get exposure to the international markets through. The third option that is available to you is you can invest into ETFs. So there are some ETFs that track indexes in the US markets, and those are an easy option for you to invest in rupees directly into the US markets. And the last option that's available is the direct investment, wherein you're actually opening a brokerage account in the US the same way that you would open a brokerage account in India. And you're holding dollars by yourself under your name and making investments into the US market. So, yeah.
Cool. Yeah. So that, you're actually leading on to my second question, which is the process, which is, or you could call it the use case, that now that I want to do this entire thing, what are the specific opportunities, challenges? Because, for me sitting out here, if I'm buying Indian stocks with an Indian brokerage, it's quite simple. I have to open, I need a demat account, I need a brokerage account, and I need a bank account. I just link up all three of them and boom, I am pretty much good to go. From whatever I know, it's, I'm not sure how easy or difficult it is for me to do the same thing for US stocks. So just walk our listeners through this entire process.
Yeah, definitely. And it has become almost as easy as opening an Indian brokerage account now in this technology age. So what you would do is you would basically go through a similar KYC process that you would go through with an Indian broker. The PAN and the Aadhaar is what you require in terms of identification. And the SEC has some additional questionnaires that need to be filled in, just suitability questionnaires. So this entire process takes about 3 to 4 minutes, and it's now completely online. Earlier, there were paper requirements, which used to make it super cumbersome. But now it can be done literally in 3 to 4 minutes online. So once you submit that KYC information, it takes about 1 or 2 business days for our company to get back to you in terms of, okay, is everything fine, and whether your brokerage account is open or not. So if everything is fine, then basically you have a brokerage account open with a broker in the US under your name. The next step for you to
I'll just stop you there before the next step. So I just want to ask this question that would I have to deliver any physical documents to you? Because I think in some cases, at least for the Indian brokerages, you have to give a physically signed power of attorney or stuff like that. So of course, I would love it. And especially in times like these, to just have the entire process in a very smooth and digital manner sitting at home. Is there any physical document requirement out here?
So to get onboarded and to open your brokerage account, there is absolutely no physical document requirement. Okay. The piece that comes in is when you have to transfer funds, wherein you might require a physical document. It depends on the bank you're working. So to open a brokerage account, absolutely nothing.
Okay, go on, please. You're saying the next step in the process.
Yeah. So the next step for you would be basically loading funds into your brokerage account. And so that is not as seamless as it is in transferring funds into your India account, wherein for the US markets, you're basically transferring funds under the liberalized remittance scheme of the RBI. So that is a scheme that governs essentially all money that an individual can send outside of India. And there is a cap at $250,000. So $2.5 lakh is what you can transfer every year abroad. And so for investments abroad, there are certain regulations that need to be complied with. Now, different banks have dealt with it in a different way. For example, if you bank with ICICI, the process of transferring these dollars into your brokerage account is completely online. You can literally sit at home, open a brokerage account, transfer funds in dollars, and start investing immediately. Whereas with other banks, there are some forms that need to be submitted into a branch. The way we simplify it is we basically have tied up with these banks, and you don't need to go anywhere. We'll come, take the paperwork from you, and submit it at the branch.
Okay, that's pretty interesting. So you're saying that if I have an ICICI bank account, the process is smoother as compared to the other banks, right?
Correct.
Okay, so walk us through the process. Okay, let's assume that I'm actually going to place an order now, that I want to buy, say, 100 shares of Apple or 100 shares of Google or whatever it is. And I'm starting from zero. So what is the step-by-step process for me to execute the entire procedure? Assuming that I'm taking the stocks for delivery, and I'm not doing any day trading because I don't want to get into that discussion. I just want to take an example where I'm buying stocks for delivery. Just walk us through the procedure out here.
Perfect. Yeah. So say now you transferred your funds, you have say $5,000 lying in your account. Now, one of the things that the US brokerage accounts enable is you can basically hold cash in your brokerage account. So you don't need to deploy it immediately. Say you are waiting for some opportunity to come in. So those $5,000 will lie in your account. And when you want to go in and buy, say, Apple shares. So what we have enabled at Vested is basically a concept of fractional investing, where you can do cost-based investing versus share-based investing. So essentially, you can say, I want to invest $1,000, and it will back calculate the amount of shares, and the shares can be in fractionals up to the eighth decimal. So it gives you much more flexibility in terms of how you can invest. So you would go into the platform, just look at, say, an Apple share, put in an order for it based on the cost or the shares that you want to buy. If the markets are not open, which they typically are not when when we are in India and looking at the markets, they open in the evening in India time. And so your order would still be put in a queue. And once the markets open, the order gets executed at the market price that is available.
So you're saying that if I put in $1,000 limit and I want to buy 4 stocks, so I just need to put in the system that these are the 4 stocks and this is $1,000. It will help me with the approximate quantities. And you're saying that the demat can actually recognize a fractional share. Like I can actually own 1/4 of a share in Google, for example.
Exactly. Yeah. So that is something that's pretty commonplace in the US. And we are super excited to be bringing it to investors in India as well, because it really enables a barrier to go down. For example, I literally wanted to get started with investing, which is how this entire thing started. I wanted to buy some Amazon shares. And now Amazon is $2,000. So I thought, 1.5 lakh rupee in just one trade, that was something which was way beyond my capacity. So I couldn't buy it. But now with this fractional investing, you can literally start $100, $500 and build your portfolio over time.
So just as a point of interest, how is this even possible? Out here in India, I know that I can buy fractions of mutual fund units, but I can't buy, say 1/10 of HDFC Bank or something. So how does that work?
Yeah, so to understand how it works, there are 2 things. So one is the way the structure is of the brokerage accounts is a little different, wherein there is no demat account in the US. There is just a brokerage account. So all the funds are held at a custodian in the name of the broker. And this is across all brokers in the US, standard practice. And then on the broker's books is where your shares are held under your name. So this concept is called in-street name in the US. And so then the broker, what they can do is they enable this fractional investing, wherein they buy a share and can distribute it across different buyers or sellers. And this is something that has been allowed by the regulator there and been practiced since quite a few years, actually.
Wow. Okay. That is really interesting. I just want to circle back to one thing that you said in the starting about how, you just take an example of, say, $5,000 that you put into your bank account, and then Vested will pick up that money and transact on your behalf. How does that work for me? Who do I go to buy $5,000? The bank which I've linked to your brokerage account, is that how it works?
Yeah, so the way it works is basically you are the one who is transferring money into your brokerage account in the US. So we don't touch the funds at any point. So it's basically Anupam is sending money through his ICICI bank account. ICICI will convert the INR to USD and send it to the broker's bank account in the US, who will then apportion it into your brokerage account. So it's basically always under your name.
Very interesting. And then I have to pay whatever is the bank charges and the conversion charges and this and that. And that is a different topic, I'm sure. But that I'm just saying that might increase my cost a little bit, because buying US dollars also has a cost to it. Would I be right in saying that?
Correct. Yeah. So that is definitely one of the challenges in the process is the FX fees that come into the picture. What is happening now is banks are also realizing that this is an additional opportunity for them to earn fees from revenues. And so as the volume increases, they are more than willing to reduce the costs that are passed on to the end user to facilitate a larger volume. So as time goes, we've already seen some progress in that end in terms of the ease of doing it. Whereas earlier you had to always submit a form, now it's online. The next step would be making it cost effective for somebody to be able to transfer funds specifically for investments.
Okay, now since we're talking about cost and all, and I want to kind of wind up the first part of our recording on this, just walk us through the various costs involved in this. And, for the listeners' benefit, if I'm transacting in Indian shares, I think all of us who have a brokerage account or a demat account know that first there is brokerage, which could be from 0 to 0.5%. Then demat charges are there, which is typically once in a quarter. It's a very small amount. Then, of course, there's GST on the brokerage. When you have brokerage, you've got security transaction tax, you've got stamp duty. So my guess is that when I'm buying anything worth 100, I have to add on a cost of anywhere between 0.5% to maybe 0.8% or somewhere around about that to get the total cost. So similarly, Viram, how does vested work? What would be the cost out here?
Yeah, so in fact, on the platform, the model that we have adopted is a completely commission-free model. So we don't charge anything on a per trade basis. And this is something that has happened across brokerages in the US where everybody has gone to zero commission. And the model is based more on advisory. So we've built the platform more as a wealth platform where we provide value-add services for which users could opt to pay. On a per trade basis, we don't charge anything. One of the big reasons also for that is that so intraday trading is actually not allowed by the RBI for international investing. So it becomes more of longer term buy and hold wealth creation opportunities. So there is no frequent buying and selling and commission earning from that. And so based off of that, the business model for us is we don't charge anything per trade. In fact, all the taxes and everything is also on the back end that is taken care of. So as a user, if you're putting in $100 trade, you will get your shares worth $100.
Fantastic. And then whatever are the costs that would come to me would be what? Either levied by the bank and that would get directly debited to my bank account, I guess.
Correct. Whenever you transfer funds, that would be there. Or if you opt into, say, one of the products we offer is a pre-built portfolio. If you opt into a pre-built portfolio and you want somebody to help with portfolio creation, then there would be certain costs that we have for that.
Okay. So last question, because on the other side of the break, I want to focus essentially on the product and the various services that you offer. So last question, a fairly obvious one is the taxation angle on this. So what kind of income tax implications am I looking at out here?
Yeah, that's a very relevant question. And so the way it works is basically you don't have to pay any capital gain taxes in the US. Whenever you sign up, at the back end, what we are doing is we are submitting a form to the US authorities saying that you're a non-US citizen and you don't owe any capital gain tax in the US. So all taxes are in India. They are long-term gains are 20% with indexation benefit, and there's a 24-month threshold post which it becomes long-term. For short-term, it's according to the income tax slab of the investor. And in dividends, what happens is basically there is a withholding at the broker level in the US. It's a 25% withholding. However, India and the US have a double tax avoidance agreement. And so you can essentially get credit for the tax you paid on the dividend here when you file your statements. And so that's something that we actually help our users with and simplify it for them to be able to file taxes here in India.
Yeah, because I thought that the withholding tax can be a bit of a pain if you don't do some amount of handholding. So you're saying that the capital gain that I'm looking at out here are on par with the debt fund, right?
With a lower threshold for longer term.
With a lower threshold, because I'm at 20% plus indexation.
At 24 months as long term versus 36 months for debt funds.
Okay, got it. Understood. Folks, we'll take a break on that. My guest, Viram Shah, CEO and co-founder at Vested. We are talking about investing in US stocks and ETFs. We spoke about the process, costs, and a lot of other stuff. On the other side of this break, we're going to talk about specifics. Okay, maybe how does it feel to own the FANG stock, Facebook, Amazon, Apple, Netflix, Google, and talk about what services specifically does Vested offer. Viram spoke about advisory. We'll get to all of that on the other side of this break. Don't go anywhere. We'll be right back.
Hey, everybody. Welcome to another week on the IVM Podcast Network. If you aren't following us on social media, please do. We're IVM Podcast on Twitter, Facebook, and Instagram. I'd like to thank our sponsors this week, Paytm Money. As we go into God knows what week of the lockdown, we've been trying to make sure that we get as much content out to you as possible. We had some interesting episodes in the last week. Cyrus says we had Angad Singh Ranyal on it. That was a fun episode to listen to. On the Filter Coffee podcast, we had Taslima Nasleen and Arunav Sinha on that. That was another great conversation. Karthik Srinivasan joined Varun on Advertising is Dead. And guys, look for Pratik Oswal on Paisa Vaisa podcast with Anupam Gupta. That was another great episode. I'd also like to let people know that the show that we're doing with Mr. Ashish Vidyarthi, Begin the Journey, is now going to be releasing 3 times a week. So do check that out. I'm sure you'll enjoy that. And with that, let's get you back to your show.
And welcome back to this special episode of Paisa Vaisa. My guest, Viram Shah, CEO and co-founder at Vested. In the first part of the show, we spoke about the concept of investing in stocks abroad. And in this part of the show, we are going to be talking about the specific aspects of the Vested product. Viram, so let's start from, investing or even trading in stocks for someone who's new can be a little bit difficult in terms of, I remember when I had started off the entire process, there used to be concepts like cash and carry, market limit, and a lot of stuff. So when you're putting in your first order, it's a little bit intimidating for someone who's new to the market. So just tell us how Vested handles the entire user experience.
Yeah, definitely. I mean, in fact, along the lines of it being an intimidating process, one of the behaviors that we've seen on the platform is that a lot of people actually transfer a small amount of funds early. So they might do, say, $500 or so to see how this entire process is working, because it's a very new thing for a lot of people, right? Sending money to the US for investments. And then they typically come back and do substantially larger amounts of investments. So that threshold or that fear is kind of taken away once they try the platform, see some trades going through confirmations, and then they're more comfortable investing larger sums.
That's actually a pattern that you see. People putting in maybe just $300, $400 and then taking it to maybe 1,000 plus or something?
Yeah. Substantially larger after that. But that's there's always like a test sort of amount that we see.
Yeah. So the RBI limit under LRMS is 2.5 lakh. That's 250,000 US dollars, and that's a per year limit, I guess, right?
Correct. Yes, per year, per individual limit.
Per year, per individual. Okay, great. Okay, so let's get back to the user experience at Vested.
Yeah. So the way it would work is you would basically either go to our web platform, which is app.vested.co.in, or you would download our app from the app stores to be able to start investing. So the first step would be, as I mentioned earlier, you go through the KYC process, which is a complete online onboarding and requires local India identification proofs. Once you've submitted that, it takes about 3 to 4 minutes. We open a brokerage account in 1 to 2 business days. After the account is open, you would undergo the fund transfer process where you're actually acquiring dollars and loading them into your account. So in that process, we have partnered with banks and simplified it to a certain extent. A lot more simplifications coming soon. After the funds are in is when you start the investment journey, right? And so to simplify the investment journey, what we've done is we've built the platform ground up as a wealth platform. So it provides you certain nudges, certain kinds of advice that make your investment decision simpler. For example, one of the things we have done is we limited the universe of stocks to 1,000 stocks in ETFs, which is a curated list. So it basically makes it much easier for somebody to find an investment that they're looking at. So for example, if you look at the ETF universe in the US, it's super large. And say if you had to invest into the S&P 500, there are 4 different ETFs doing the exact same thing. What we've done is we've curated 1 or 2 ETFs from that list, and based on volume or based on the brand that has created that ETF, we have simplified that for you and included the ones that are much more relevant or better investments. So that's the level of curation that we offer. The second thing that we have done is we've basically made our universe divided into collections. So it makes it much easier to find something that you're looking for. For example, we have a global stocks, a global geography-based collection, which has basically different geographies like South Asia, Southeast Asia, Latin America, global, as different collections. And say, so if you want to invest into Southeast Asia, you can quickly go to the collection, find an ETF that is, say, investing into Vietnam and invest into that. So the discovery of different stocks and ETFs becomes much easier, because what we realize is it's a very new universe of stocks, right? A lot of us know the FANGs of the world, but beyond that, if you have to build a portfolio that sustains over time, you're not super well aware of the US market. So that's what we've done. And the third thing that we've done is we basically created pre-built portfolios, and we call them vests. So these portfolios either invest according to a theme or according to a strategy. So a theme would be, say, software as a service. So we have a software as a service portfolio that does research. So we have a research team that does research and shortlist companies that are following the theme. What we've also done is we have also enabled strategy-based portfolios. So for example, we have mimicked what Ray Dalio's strategy has been to build an all-weather portfolio. Ray Dalio is basically the manager of the largest hedge fund in the world. He has a public strategy of investing across stocks, bonds, commodities, and gold to create a portfolio that sustains over time. And so we've created an all-weather portfolio that's inspired by his strategy. So people can basically pick their risk profile and invest into these portfolios in an easy manner. And then just on the last step, what you can do is you can hold cash if you want, but if you want to bring the money back to India, we have a withdrawal process which you just put in a request and the money comes back to your India bank account.
Okay, and I heard that US brokerages also pay interest on the cash that you keep with them. Is that right?
That's correct. So it depends on the broker. Different brokers have taken different approaches. The interest compared to what it is in India is minuscule. What we do is currently we pass on that interest to our users. It's about 1.6% per year. Some brokers don't, some do.
Okay, and then of course there is the entire thing, the big thing of currency movement that is in your pocket, because over 10, 20 years the rupee tends to depreciate against the dollar. I don't know what's the exact annual rate, but maybe you can help us with that.
Yeah, definitely. That's one of the underlying kind of themes of the platform is rupee diversification. So basically hedging against the depreciation of the rupee, because even though your wealth is increasing with the stock markets in India, at a global level, your wealth is actually not increasing with the same levels because the rupee is depreciated. So holding these US dollar investments allows you to hedge against that. It's been about, in the last 10 years, about 3 to 4% per year has been the depreciation. And so that essentially adds to your stock returns. And also to a certain extent helps offset the FX charges that you might be paying when you're transferring funds.
Okay, and to understand that, although you just offer US stocks and ETFs, the fact is that a lot of the US-based ETFs offer exposure all around the world. So it's not that you have to, that I need a brokerage account for buying, say, something in Venezuela, or I need to have a brokerage account for buying something, say, in Thailand, because a lot of the ETFs can give you exposure via some fund, maybe an emerging market fund or something of that sort. Have I understood that right?
Exactly. That is actually one of the biggest messages we are trying to get across to people, is that this is an opportunity to basically invest into the entire world through the US markets, because there are so many different ETFs and you can get exposure to any geography that you would want. So to internationally diversify, this is one market that you need access to. You don't need to keep going to multiple unless you want to invest in particular companies, which is very rare.
Okay. Understood. I just want to get back to this to the fractional investment part that you made a mention of in the first part of our recording. How would that work?
Yeah, so one of the key barriers, as I was talking about, was the high cost of shares. If you look at Berkshire Hathaway is one of the famous examples. Their Class A shares are $100,000. I think more than $100,000, which is just ridiculous. Yeah. So nobody has been able to buy those shares. Of course, they have a Class B, which is much cheaper. But basically, a lot of the shares are in dollar value very high. Even for US residents, it becomes a big barrier. So what fractional does is it basically allows you to invest into fractions of a share. And so you can create your portfolio, building it in smaller amounts over time rather than having to deploy funds in one go, which is a very high barrier.
Excellent. So how would the dividends work here then? Stuff like dividends, split, bonus and all that kind of stuff, how and even buybacks for that matter, right? Let's say that I'm holding Apple shares and Apple does a buyback. How would that work for me? The same as it would in the same way as it would in India, or is there something different?
So the dividends, the way they would work is they basically get credited into your brokerage account directly after the withholding tax has been reduced, and you can reinvest them the way you want. And the same way for buybacks as well, splits as well. They're basically the way they would affect you as any shareholder, the same way they would be affecting you as your shareholder there, even for fractional shares.
Okay, cool. So just winding up this recording, the two obvious questions that come to my mind. The first one obviously is what everybody wants to know. That what is your view on what's happening right now? How are you making sense? And what's your take on what people out here should do if they are holding US stocks and US ETFs? So just walk us through your view on that.
Yeah, I think, I would echo what a lot of investment experts have been saying. I think I don't have anything unique to say. It's basically avoiding knee-jerk reactions and holding a diversified portfolio that is for a longer term than trying to time the market, especially bottoms. One of the things in the US markets, especially that we have seen on our user base, is that a lot of them are new investors into the US markets, right? So they don't have existing investments. So it's not like they have burned their feet investing into the markets. So they see this as an opportunity to enter the markets at a good point in time. and start investing. So we've definitely seen increased volumes over the last month or so. There's, of course, on the larger situation, no saying what the economic impact is going to be. The US government is, in fact, the stimulus that it gave, it's also looking at additional measures that it can to support the economy. But there is actually no predicting how the actual impact is going to be. So creating a well-diversified portfolio, adding some kind of international diversification to also shield yourself from the situation in India would be a longer-term prudent strategy, in my opinion.
Great. Last question, obvious question, risks. What do you think are the risks involved in investing abroad?
Yeah, I think so. There are a couple of them definitely that come to mind. One is the FX risk, which we spoke about. It is a risk in the sense if you look at it in the short term, but in the longer run, the sort of trend has been that the rupee has depreciated, and it does seem like that will continue. So that risk could be an advantage. The other risk is the fact that the lack of know-how of the US market. So a lot of us might be enamored by the entire all the brands that are there listed. They're all strong companies. However, kind of trying to time the investment into these companies and without doing active research would be something that we would want our investors not to do. So being aware of kind of how to build a portfolio rather than just going after the brands would be one thing. And the third is essentially investing as per your risk profile, because a lot of people get carried away by just the big brands that are there and the opportunity of investing in them. I would still recommend them to think about their risks and accordingly invest into the US markets as well. There are a lot of ETFs that are available there, which provide a very good diversified exposure rather than picking particular companies.
Fantastic. So, Viral, how can our listeners reach out to you? What's the website? The apps are available on Apple and Google, I guess. So, just let's wrap up on this. Where can our listeners get to know more about Vested?
Yeah, so they can definitely go to vested.co.in, which is our website. If they would like to interact further, they can definitely shoot me a tweet. I'm at Viram Shah 8 on Twitter. And drop us an email at any point. I am at viram@vestedfinance.co. I'd be happy to answer any questions that you might have in getting your international investment journey started.
Fantastic. Viram, thank you so much for your time. Thank you for doing this recording for us. Folks, that is a wrap on this episode of Paisa Vaisa. That was Viram Shah, CEO and co-founder of Vested. Our topic was investing in the US stocks, US ETFs. We spoke about a whole lot of things. Check out the website, check out the product. I think that if you're looking for diversification, you should know a little bit more about the product and generally about the concept of investing abroad. I hope this was useful for you. And my request, as always, stay indoors, stay safe. And a big thank you to everyone and on the front line fighting this battle for us. Viram, thank you so much for joining us.
Thanks a lot. It was great.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Entertainment is like food for the brain. It's a window to culture and a great way to understand the world around us. The internet has changed what it means to be an entertainer, creating new storytellers with millions of fans. It has spawned a new breed, the story-sellers, those behind the scenes creating the business for this ecosystem. They work with brands, platforms and channels who are keen to capitalize on an audience hungrier than ever for more stories. I'm Vineet Kanabar, and I have a ringside view to how stories are told and sold. On my show, I bring you creators, artists, executives and marketers for a freewheeling conversation around the business of entertainment. Tune in to Storytellers and Story Sellers for personal stories, analysis and criticism every Thursdays as I talk to the brightest minds telling or selling great stories today.
Beta, did you know 79% of all scientists in NASA are Indian only?
देखो, इंडिया में टैक्स सिर्फ मिडिल क्लास भरती है. Everyone is just enjoying free यार.
आजकल के youngsters are only interested in partying and enjoying. उनको देश की पड़ी ही नहीं है.
बेटा तुम बस शादी कर लो, उसके बाद तो you can enjoy life like anything.
I will tell you what this country needs. This country needs 15 years of dictatorship. That is the only way to become a superpower. See the Chinese, how much they've progressed.
सुनो, तुमने ये WhatsApp forward देखा?
So what's common between all of these statements?
They're all absolutely rubbish.
Fake WhatsApp forwards that spread like wildfire.
And statements that defy any logic.
We are here to debunk them all.
We're your family WhatsApp group's worst nightmare. We're what happens when you read a book.
Basically, we're just a bunch of guys who want to cut through the bullshit of everyone saying this, how it won't be true.
So that the next time someone confidently squeezes out some WhatsApp or Twitter BS, you will look them dead in the eye and go, Uncle, please sit.
So join me, Joel,
And me, Tushar.
every Mondays for a fresh new episode of Uncle, Please Sit.